Alright guys, welcome back to Only Divergences. In this video I'll take a quick look at the S&P 500. As the thumbnail suggests, we have started to see some cracks appear in the current trend, this current rally that we're in. So what I want to do today is quickly look at the implications of these recent moves and what we could reasonably expect going forward. Remember, we still have Amazon and Apple to report on Thursday after hours. I will say that with the exception of Facebook, most of the big names that reported this week seem to have broken out and moved materially higher, so I would keep that in mind. Before we get started, just a reminder to like and subscribe as always. So right now we see the S&P here on the daily, and we can see that after many green days, we started to see some slowdowns, some cracks, especially yesterday when we had the first real red candle here, right? So right now we want to ask if this is simply a consolidation or if we can expect more downside and materially more downside from here. So on the daily we do have this strong but very precarious position that we're in of this rally, right? We've come up a long way and now we're kind of dithering. We've had 2 weak days. This rally has been very thin, and it's been almost an entirely straight line up. So now what? At this stage, you can say that the S&P is still consolidating, but I do remain concerned. What I will say is that there is no material bearish divergence on the daily time frame. You can see that, we're just starting to move this MACD higher, right? So you can't even claim, like back here we had some divergence. Back here we had divergence. We had divergence of a few places. Right now this is just the initial rally. So if we do get a move lower, then that move lower will be relatively weaker. I would not be too concerned about another material pullback, given the fact that we've broken new all-time highs and we're still kind of rallying. Now, that said, we have to understand that there have been instances in the past where we've seen material pullbacks in circumstances like this. One thing I like to do is compare current moves to previous moves, and we can see here that we have this MACD that has risen very quickly, and we'll just look at past instances where we've seen a MACD rise quickly like this, and one is over here, and you can see that after a very long rally, we did have some pullback. Right, I want to keep the right side here. Did have some pullback, but it was a very choppy market for many days. We didn't go anywhere. Then we eventually came down. And you notice that the MACD here, at this point, it looked like where we are here, right? So it was weeks and weeks before we eventually came down, and I'm actually favoring that, to be perfectly honest. Now, I want to test something out on the hourly. And remember, this YouTube channel is about testing hypotheses in the market and seeing if we can find precise patterns based on those hypotheses to get a better understanding of markets. So we've been using this DMI indicator down here. And generally when we have elevated red and elevated black like we have here, so the red indicates the strong bullish move and the black indicates that it is a trending move, this is a signal that the market is in a healthy uptrend. But a theory that I've been testing in markets is that when you get a move higher past the initial peak of black here, see this? You run the risk of a reversal, whether it's sharp or extended. Or to put it simpler, immediate upside after a point like this is limited. And the point like this is any sort of elevated red after the first initial peak. Now this is also true of elevated green going this way. And now notice that we can go back to this previous move here and use this hypothesis to look at what potential we have here compared to here. Notice back here we had a similar pattern. And after we had a move lower in black, so this would be the peak in black, right? And we started to move lower. After we had a move lower, every elevated green was a buying opportunity. Notice we had green high here. This is where you wanted to buy because it went higher right away. But notice that after the move is over, so after black has basically come down, any subsequent elevated green, like this one here, is a buying opportunity, right? And you can see that if you buy here, moved higher. Same thing here, right? Black line has come down quite a lot, meaning there is really no strong trend on the hourly. And then green gets elevated, and this was a good buying opportunity, obviously, as you can see. Now, the reason why I use the MACD is because I always want to corroborate this position with the MACD, and MACD does a very good job of helping out with that. So what that means now is that if we get elevated red as black drops, that could be an interesting short entry position. Obviously, this here would have been a better place to enter a nice elevated red after we've already peaked, or at least had our initial peak. But I want to test this idea out and see if it works. Right now, I want to test the idea that all we get was this reversal here. So when we look at the elevated green example here, notice that we got this post-black peak elevated green, and we did reverse, but then we reversed back. So this is what could happen here, right? So what this suggests is that we have this pullback, but then it doesn't stay here very long. We have something like this, and then it moves higher like this. And I actually could see this. I would just want to see the MACD come down here and then move higher. The question that I'm asking myself right now is whether this bearish divergence setup, you can see this here, and as it moved lower, whether this setup has already played out. Or in another way, how much more downside can we get from a bearish divergence setup like this? So this type of a quality of a bearish divergence setup within the context of an upward trend that is, quite frankly, dominant, right? Now, I will say that I am working with this hypothesis that when you break a trend, the level of volatility rises. And I think that we could say that this trend has been broken because we wanted to keep this. Objectively, what we can say is that this right here, which happens to be the 20-hour exponential moving average, has been broken, and that was held this entire time. And so the next line is this one here. So we want this to hold, and that is an expression, really, of trend strength. One thing I want to do actually is I want to take a quick look at the VIX, because you can see this weakness in the market coming a little clearer here on the VIX. Notice that if we go all the way back, this 14 level was the low, but it's generally really 15, which was the support area here. And again, 2 days ago, we reached that level and turned around, came here, hit a higher low on the VIX and came higher. So yes, we have to treat the current move a little different than the previous pullbacks in this trend for various reasons that I've listed. Even in the instances where we did not pull back on moves like this, we did get some consolidation and the market grinded a little higher. So I'm talking obviously about the S&P. As such, I think we will have some choppy days for a swing trader for the swing trader who has been long since the start of this inverted head and shoulders pattern. I assume you took profits today, and I assume you're happy with your return. I would encourage you to compare the current move to the one here in March. See here. Notice we had a similar pullback right after many up days. We had, 3 days here to pull back, but we got down to support. And actually, I want to show this on the hourly here. So you can see, where are we here? You can see similarly, we had this elevated black and elevated red, and this was kind of the peak. And when you had an elevated red with black peaking afterwards, that is really where you wanted to go short. Now, what happened is we had kind of 2.5 days of pullback before we came up, pulled back again, and then continued higher. I noticed that this was right at this 50-day EMA, and in the same way, we're kind of in the same place here as well, right? We have this pullback, we're at the 50 EMA. I wouldn't be surprised if we have a little bit of, if we tag this tomorrow, maybe if we touch it tomorrow or something, especially given what we see with the VIX. But ultimately, if we're going to compare the current move to the one in March, we would expect to move down here, maybe a bounce, maybe another bounce, and then we continue higher. But just as in March, notice, so what I really want to point out here is that over here, when we came down and we held the line, we basically held the midline here of the MACD, right? We tested it twice. So we could get something similar to that here. In fact, I can't see this MACD moving higher before it kind of comes down here just a little bit more. So I think just a little bit more, and we can move higher. And that would correspond with maybe a green day on Friday if we get a day tomorrow where we consolidate and then we move higher on Friday. And that would be in line with Apple and Amazon reporting Thursday after hours, right? So I wouldn't put it past this market to do something like that. But right now, the real questions you have to ask yourself is, how strong is this bullish? Is this bearish divergence here? Is this going to end the rally, or is this just a pullback to a more reasonable level, say somewhere around here? And I think that that's probably the case at this time. I think that if the market does move down here materially like this, first of all, that would be a very elevated level of volatility very quickly. But it could also signal that this move here higher was kind of a false breakout. And what I want to emphasize, and I'll do it on the daily because it's easier to do that there, is that in 2017, 2018, we had instances like this. So look at this here, right? This was the peak in February 2018. Then we made a new marginal high before we had a 20% pullback. Then we made a new marginal high before we had a 10% pullback. Then we made a new marginal high before we had a 9% pullback. And then we made another new marginal high before we had a 8% pullback. Excuse me. So you can see that just because a stock has broken out to an all-time high doesn't mean that it's off to the races. Even here, we made a new all-time high and then came right back below it. The only other time when that didn't happen was here, where we made a new all-time high and then it was off to the races. So with that said, I think this choppiness is a little too much for me, especially since I don't like going short. As I've stated, I am really focused on Shopify and Amazon. Apple looks a little odd to me right now. I'm trying to see if it's just trying to consolidate before earnings, and then it can pop higher just like the rest of the FANGs. I will try to get a video for Shopify out tonight, but it might be a little later just because I do have to meet. I do have a meeting that I have to attend to. So I want to get this video out, and then I will be back later tonight with analysis of Shopify. Thanks for watching, guys. Remember to like and subscribe, and I'll see you tomorrow after the close.